All right. Hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer how we start each of these podcasts. Nothing in this video or any of our other materials should be taken as investing advice. We frequently talk about high risk ideas on this channel and on this podcast. So make sure you do your own work, consult a professional before making any investment decision. So, with that being said, the topic of today's episode is going to be Coinbase. So, you might remember Coinbase as back in 2021, one of the largest IPOs of that year. And in fact, one of the largest IPOs of all time, close to $100 billion at the time. And it kind of took advantage of the entire crypto mania of 2021 to make huge revenues and profits that eventually dissipated in the crypto winter of 2022. However, in the past year, with the resurgence in interest in crypto and the increase in Bitcoin's price, crypto trading volume has increased, and so has Coinbase's stock price. But that leads to the question of, are investors making the same mistake twice, or is there something different about this time that makes the increase in share price more justified? So with that, I'll kick it over to you, James, to explain what's going on this time around with Coinbase.
Yeah, so if we look at Coinbase's revenue and profitability over the past few years, there was a massive increase in both 2020 and 2021 because that's really when crypto took off. There was a huge amount of interest among retail investors and new investors who were just getting into crypto. And then so that created a Coinbase onloaded a massive amount of new users and it had a massive amount of trading volume, and they charge commissions on each trade. So their revenue absolutely surged in 2021, as did their profitability. And that's when, as Ryan explained, they were able to IPO for a $100 billion valuation because their financials were so strong at the time. Of course, in hindsight, that the crypto mania of 2021 was not sustainable. We had the crypto winter in 2022, and then Coinbase's revenue absolutely collapsed, right, from almost 8 billion in 2021 to about 3 billion in 2022. And they went from making an almost $3 billion profit in 2021 to making a $2 billion loss in 2022. This was, an extremely volatile business. When there's a crypto boom, they make a ton of money. When there's a crypto winter, they lose a ton of money. Now, in 2023, their revenue was about the same as 2022, but their operating loss, they went from losing $2 billion of operating loss in 2022 to about break even in 2023. And that's because they did some major layoffs and cost cutting to right size the business in light of, the lower revenue. But, as, it looks the revenue was about the same in 2023 as 2022. But when we dig a little deeper and look at the segments of their revenue, we can get an interesting picture of what's been going on recently. So there's really three ways that Coinbase makes money. So as shown here in the orange, the biggest way they make money by far is transaction revenue. So as a retail investor, when you trade on Coinbase, their pricing structure is very complicated, but it averages out to, on average, when you make a trade, they will take 2% of the value of that trade as a transaction fee. So these are very high fees. And when when there's a crypto mania and people are trading a lot on Coinbase, Coinbase makes a huge amount of money. So that's the orange bar there is the crypto transaction revenue. There was a massive spike in 2021 as expected. Transaction revenue decreased massively in 2022, and then it actually decreased even more in 2023. So transaction revenue in 2023 was significantly less than transaction revenue in 2022. However, this was partially offset by a massive increase in stablecoin and interest revenue. So if you've heard of the stablecoin USDC, which is one of the most popular stablecoins, it is run by a company called Circle. And Coinbase is a strategic investor in Circle, and they have some deals with Circle, whereby Coinbase is entitled to a percentage of Circle's profits. And so, how does Circle make profit? When you buy a stable coin from Circle, you basically give them $1, and then in exchange, they give you one USDC stable coin. So basically, you have a situation where Circle has this big pile of cash as their asset, and then their liability is all of the outstanding USDC. They pay zero interest on that liability of USDC, but they earn interest on their pile of cash. And as interest rates have increased over the past year or two, the amount of interest income Circle makes has absolutely exploded. And Coinbase, being a strategic investor in Circle, they get some of that. So that's why we see this, massive increase in this blue part here, is because the interest rates have gone up. So they used to be making almost nothing on from Circle. Now they're making huge amounts of revenue. And additionally, when you have a Coinbase account, you own some crypto in your Coinbase account, but you also have some idle cash in your account. Coinbase doesn't pay you any interest on the cash, but they lend that cash out, into a money market fund or whatever. So they also earn interest on the idle cash, right? So from the cash at Circle plus idle cash in the Coinbase, within Coinbase itself, that's where they make interest. Obviously, with interest rates increasing, that revenue stream has massively increased, and that has partially offset the decrease in transaction revenue. So that's something that's very important to understand. And then finally, the other net revenue, that includes like a few miscellaneous things. For example, if you own Ethereum on Coinbase, you can stake Ethereum and earn like 4% a year. Coinbase will stake your Ethereum for you, and then they take a 35% cut of that Ethereum yield. And they also have like some subscription products like Coinbase One and Coinbase Cloud or whatever. But those are pretty small. So really, the two main segments that we need to focus on, which are the main drivers, are the orange one, transaction revenue, and the blue one, interest revenue. So yeah, as I was talking about earlier with interest rates, in 2023, the interest rates were about 5.3%. Coinbase generated about $1 billion of interest income, right? So that's both from their the cash at Circle plus the cash on Coinbase itself. They made $1 billion of interest income in 2023. And even despite making so much interest income, they had an operating loss of negative $54 million. Now, it's almost universally expected that the Federal Reserve will cut interest rates over the next couple of years. That's because inflation has come down a lot. And so, as inflation comes down, the Fed will eventually cut interest rates. And this chart on the left here is from the Federal Reserve's dot plot. So this is a survey done of all the members of the Federal Reserve, all the governors of the Federal Reserve, and they give their projections of where they think interest rates will be 1, 2, and 3 years in the future. And this is about as good of an estimate you're going to get because this is literally coming from the Fed itself. And if we look at the average estimate for 2024, the federal funds rate is expected to decrease to 4.8%. And if we assume, all else being equal, we basically take Coinbase's 2023 income statement and then decrease their interest income in proportion to the expected decrease in interest rates. Their $54 million loss in 2023 would explode to a $150 million loss because they get less interest income. Then we go out to 2025, and the average expectation is 3.6% for interest for the federal funds rate. In that case, all else equal, Coinbase's loss will increase to $370 million. In 2026, the federal funds rate is expected to be 2.9%. And then if we run the calculation again, Coinbase would lose $500 million. So the point is that Coinbase's core operations are unprofitable, but they were able to almost break even in 2023 thanks to this massive $1 billion of interest income. But as interest rates are expected to decrease over the coming years, their interest income is going to decrease proportionally, and then they're, unless they can turn around their core operations, they're going to start losing money again. So that's very important. When we see this, that their losses decreased in 2023, well, that's partly because of their cost cuts, but it's also partly they had this massive windfall from higher interest rates, which that windfall is going to reverse over the coming years. So that's something very important to consider. The next thing is we have to think about the competitive situation. So Coinbase, the most important thing to understand about Coinbase is that they absolutely rip off their customers, especially their retail customers. So if we look at this chart here shows the take rate, and the take rate is calculated as Coinbase's transaction revenue divided by trading volume. And it's actually, so in 2020, the take rate for retail customers on Coinbase was 1.4%, and then 1.2% in 2021, 1.3% in 2022, and then 1.9% in 2023. So in 2023, Coinbase generated transaction revenue of almost 2% of volume. So that means on average, a retail investor trading on Coinbase loses 2% of fees every single time they trade. And that's like highway robbery, because these days, when you compare it to the stock market, if you get an account on Robinhood or a dozen other commission-free brokerages, they'll do payment for order flow, so you might get slightly worse execution, but that's going to cost you like 0.1% per trade or some minuscule amount per trade. Coinbase is charging 2% every single trade. So if you trade regularly, you'll absolutely get destroyed on Coinbase. And so that's how, Coinbase is really ripping off their customers. And there are competitors that charge much lower rates. For example, Kraken, which is another large crypto exchange, they charge a rate of between 0.16% and 0.26% per transaction, whether you're a maker or a taker. But even if you're a taker and you're getting charged 0.26%, that's way less than Coinbase's 1.9%. And so Coinbase, the reason why so many people use Coinbase is because they do so much advertising. Everybody knows them. They're talked about in the media a lot, so people kind of view them as legit, and they're a publicly traded company, which also, causes people to view them as legit. But eventually, when you have competition, when you have so many other brokerages that offer crypto trading, eventually, their customers are going to realize that they're getting absolutely ripped off with these massive fees. So in the long run, I don't think that their massive fee structure is sustainable. And as we talked about earlier, Coinbase's core operations, when you exclude their interest income, is unprofitable. And so despite charging these exorbitant 2% transaction fees, Coinbase is still, their core business is unprofitable. So that is, a really concerning sign, I think, for Coinbase, that they are so inefficient that they lose money even though they're ripping off their customers. Yeah, and then earlier I talked about they have, you can do like staking of Ethereum and some other proof of stake tokens. And then Coinbase will do this, handle the staking for you, but they take a 35% of your yield, which is, a massive fee. This is a relatively small part of the business in terms of Coinbase's revenue, but it just goes to show, another way that they rip off their customers. And by comparison, there's another platform called Lido, and they only charge you 10%. So they basically do the same thing, but they're only charging 10%, while Coinbase is charging 35%. And the way, at least in my opinion, the way that Coinbase advertises the yield to their customers is super sketchy, because if you look at this thing on the left here is from the Coinbase website. It says, okay, if you have Ethereum, you can earn up to 2.67% yield. Just looking at this, you'd have to go into the fine print to see that they're actually taking a 35% fee, but they just show you the 2.67%, which is the amount already deducting of the fee. So the casual observer who doesn't really read the fine print, they might not even know that Coinbase is taking a fee, and they think that you only get 2.67% yield on your Ethereum. But you can look at Lido. Lido here, it says that you get 3.4% yield on your Ethereum. And these two screenshots were taken at the exact same time. So they are indeed comparable. So you can actually make 3.4% on your Ethereum, but because of Coinbase's massive fees, you only make 2.7%. But they don't make it obvious that the reason it's so much lower is because of their massive fee. And I think this is another thing where, as eventually this shouldn't be sustainable, that Coinbase is, again, ripping off their customers. Eventually, the customers, I think, will wake up to this. And more importantly, going back to Coinbase's financial performance, as we talked about earlier, in 2023, Coinbase's transaction revenue continued to decline, and that was partially offset by their interest income. But we can see here, this gray line is the monthly transacting users in millions, and that's on the right axis. So you can see they had a massive increase in their user base in 2020 and 2021. So starting in 2019, they only had about 1 million users. In 2020, this increased to a little under 3 million users. In 2021, when we were at the peak of the crypto mania, this exploded to 11 million users. But then 2022, it decreased to 8 million users. And then in 2023, it decreased again down to 7 million users. So Coinbase is bleeding users. And I think there's probably, two reasons for this. One is, just the general crypto mania has died down. A lot of people who kind of got sucked into the crypto mania in 2021, they've now sort of, gotten bored of it and stopped trading crypto. The other possible reason for this deteriorating user numbers is because customers are finally realizing that they're getting ripped off by Coinbase, so they're moving to different platforms. And similarly, the transaction volume, this is retail transaction volume, which is in blue. That also has been declining in line with the decline in users. In fact, it's actually been declining faster. So the core business transaction revenue is imploding, and in 2023 it continued to implode. If you've ever watched, Coinbase does these massive promotional campaigns where they run these commercials saying that they're going to update the system. So here's one of their ads. Update required. The current financial system must be updated to continue running program American Dream executable. To learn more, see below. So I'm going to pause the video real quick to show you one of these update the system ads.
Get a job, save a little, take out a mortgage, buy a house. Get a job, save a little, apply for a mortgage, get a second job, get some roommates, rent a house. Realize the only generation that's going to fix this is yours, and start building.
So you can see that Coinbase is trying to portray themselves at, the old system with the traditional financial system and the big banks and whatever, they're ripping you off and they're keeping you poor. But then come to us because with the magical powers of crypto, we're going to solve all your problems, right? So now you're finally going to be able to afford a house. Well, this is, this is one of the most BS ad campaigns I've ever seen, because we just went over how Coinbase rips off its customers. If you want to ensure that you will never be able to afford a house, the best thing you can do is go trade on Coinbase regularly and pay them the 2% fees. Because if you lose so much money paying all these 2% fees to Coinbase, you're never going to afford a house. So with all of the hype around the spot ETFs being approved in early 2024, this has indeed caused an uptick in transaction volume, as more people are trading Bitcoin in anticipation of the spot ETFs. And so when they released fourth quarter earnings, they also gave an outlook for the first quarter of 2024. And this is kind of including the benefit of the hype around the spot ETFs. So transaction transaction volume has increased, and they say that they have already generated $320 million of transaction revenue as of February 13th. And they also say that they expect $445 million of other revenue. And so if we take that, February 13th is about halfway through the quarter. So if we take that 320 million number and multiply it by 2 to get for the full quarter, then we add the $445 million of other revenue that they're guiding for, we'll get to $1.1 billion of total revenue. They also give guidance for their operating expenses. They say that their transaction expense will be about 15% of revenue. They say that their technology and general administrative expenses will be about $625 million. And then their sales and marketing will be about $92.5 million. We add all those together, and they're guiding for $880 million of operating expenses. So if we take that 1.1 billion minus the 880 million, we get about $200 million of operating profit that they are guiding to in the first quarter of 2024. So that is good. They're going, they made a loss for the year of 2023. Now they're at least going to make a profit in the first quarter of 2024. That does indeed sound good, but you have to remember that the crypto business is extremely volatile. So you're going to have good quarters and you're going to have bad quarters. So you can't just look at, they get lucky because of all the hype around the ETF approval. They make a lot of money because there's a lot of transactions. And then you say, they finally turned it around. Yeah, but it's all temporary because the crypto market is volatile. This quarter, there was a lot of hype. It could be next quarter. There's no catalyst and there's no hype. And then the transactions could just decline again. So it's not really when you have a super cyclical business like Coinbase, it's not valid to take one, unusually good quarter and then pretend like they're going to be able to sustain that, because it's very unlikely. But so the first quarter is an unusually good quarter because it included the hype around the spot ETF approval. But even then, they're only guiding for 200 million of operating profit. If you annualize that, that's 800 million of operating profit. Coinbase currently has an enterprise value of over $40 billion. And then in their best quarter, they're making in an unusually good quarter, they're making a run rate of operating profit of less than $1 billion. And how is that supposed to support a $42 billion enterprise value? It's more than 40 times. Their enterprise value is over 40 times this run rate of operating profit in an unusually good quarter. So the stock is, what I'm trying to say is the stock is absurdly expensive. And I think there's very good reasons to believe that the business will deteriorate relatively quickly. And here's the reasons why. So if you look at this chart here, it is the global transaction volume of Bitcoin in the world per day. And this part that I circled here, it's in early January, and that big spike, which goes up to like $50 billion, the largest spike here, it's on January 10th. And that is, either the day or maybe it was like the day before the Bitcoin ETFs were approved. So this was the peak hype of all the speculators trying to, pile into Bitcoin before the ETFs were approved. And then this was, unusually high volume for Bitcoin. And that happened, within the first half of the quarter, which is when they gave their guidance. So, their guidance is based on this unusually good few weeks they had in the first half of the quarter. But then after that, after the initial hype around the spot ETFs, Bitcoin trading volume has gone down to basically the levels it was previously in the fourth quarter of 2023. So, very quickly, there was a little bit of hype around the ETF approvals, but after that, transaction volume has already basically come down to normal levels. So they're not really, that's going back again to my point that Q1 is an unusually good quarter. Coinbase got lucky, but it's not something that's gonna, it's not sustainable. And finally, with the approval of the Bitcoin ETF, it was a short-term benefit to Coinbase because there was all the hype and speculation and more people wanted to buy and trade Bitcoin around this event. But now you have to consider, remember, Coinbase charges 2% per transaction for retail customers. Now you can just buy Bitcoin via an ETF. The ETF charges an expense ratio of like 0.2% per year, tiny, almost nothing. And you can trade it on a brokerage for free commission. Most stock brokerages are commission free. So now you have a way to trade Bitcoin that is orders of magnitude cheaper than what you would have to pay to Coinbase in transaction fees. And approximately one third of Coinbase's transaction revenue comes from Bitcoin. So I think it's probably safe to say that, if these ETFs catch on, that's a significant competitor to Coinbase, and we could probably see Coinbase's transaction volume and therefore transaction revenue decrease going forward. And then one final thing I want to talk about is the Coinbase's legal issues. So we won't go into depth about this because we released a video on our main channel, Wall Street Millennial, a few months ago, talking about the SEC's lawsuit against Coinbase. And basically, the SEC is accusing Coinbase, saying that a bunch of the altcoins listed on Coinbase are allegedly securities, unregistered securities, in which case they are illegal for Coinbase to facilitate trading in. And the SEC is they want Coinbase to pay back all of their ill-gotten gains with interest. So basically that means the SEC's position appears to be that almost all cryptocurrencies except for Bitcoin are securities. And if that is the case, and if the SEC wins this lawsuit, Coinbase would effectively have to look at all of the revenue, all of the transaction revenue that they have generated in their entire lifetime from anything besides Bitcoin. All that revenue is considered as ill-gotten gains, which they will have to pay as a fine to the SEC with interest. And if you calculate the numbers, it would be in the billions of dollars. It'd be like $5 or $6 billion. And it would have the potential to bankrupt Coinbase, because also they would no longer be able to offer these coins in the future. So that it's like an existential risk for Coinbase. Now, I'm not a legal expert, and I don't know how this court case is going to play out. A lot of people think that Coinbase actually has strong legal grounding to win this case against the SEC. But here's the thing, there's two outcomes. Either Coinbase wins or Coinbase loses. Okay, if Coinbase loses, it's a disaster. Coinbase probably goes bankrupt. The stock probably goes to zero. Again, watch our previous Wall Street Millennial video to get a more detailed breakdown of that. Of course, the other possibility is that Coinbase wins. Okay, what happens if Coinbase wins? Basically nothing. They continue operating business as usual. So when you have a company, facing a binary outcome like that, with, you have a significant chance of the SEC winning the case and Coinbase going to zero, theoretically, the valuation of Coinbase today should discount the probability of that bad case scenario, of the zero scenario. And then because it's discounted that, you would expect the share price to be very low, the valuation to be very low, such that if they win the case, the stock would be very undervalued. But here we actually have a case where even if they win the case and they get to continue operating business as usual, the stock is extremely overvalued, because even in the first quarter of 2024, based on their guidance, which is an unusually good quarter, they're trading at like over 40 times the run rate of their operating profit, which is a very expensive multiple. And that's even despite the fact that they have this massive existential legal risk.
Yeah, it doesn't really feel like there's anything new that's happened fundamentally with Coinbase besides just cutting some costs and maybe adding a couple of features that don't really move the needle compared to the original crypto mania of 2020, 2021. And it really just seems like people are just rediscovering crypto and not really seeing any difference from what happened in 2022.
Yeah, I think we could be set up for, a very similar situation where if there is, another crypto winter, or it doesn't even have to be a crypto winter, if the price of Bitcoin just kind of stabilizes and is flat, um, you're not going to have the types of huge transaction volume that you had in 2021, because the reason you had so much transaction volume in 2021 is because the Bitcoin price was skyrocketing, and that caused, a huge amount of interest from new investors who want to, make a Coinbase account and get in on this. But like, even if the Bitcoin price doesn't tank, but it just kind of stays flat, um, or doesn't have a monster rally, it's extremely unlikely that we'll ever get the same cryptomania that we had in 2021. So I think the idea of what what the Coinbase bulls are hoping for is like, oh, we're at the beginning of the next crypto bull rally, and then we're going to get another situation like 2021 where Coinbase is going to be able to make some absurd amount of profit. But what happened in 2021 was sort of like a once in a lifetime thing. You had the pandemic, you had the quantitative easing, zero interest rates, a massive speculative bubble across the stock market and crypto market. A bunch of factors came together and created a very unique and unusual market environment in 2021. And I think it's extremely unlikely that that repeats itself. But based on the share price action of Coinbase, it looks like that's probably what the bulls are betting on. So with that being said, I think that's about everything we had to talk about Coinbase. Before we log out, just wanted to remind everyone again about our website, differentiatedanalytics.com, which is a platform with a ton of tools for individual investors. As pertinent to short sellers, if you get a premium subscription to Differentiated Analytics, you can get our short selling intelligence, which includes original short selling research that we create. And then if you don't want to pay and you just want to get a free account, we have some other features that are available for free. And one of these features is our summaries and aggregation of public short reports. So we follow various activist short sellers. For example, here there's one from Hindenburg Research and another one from Muddy Waters Research. And what we do is we look at these publicly available short reports, we summarize them in a succinct manner, and then put a link that you can go find the full short report if you're interested. But this is, I think, a really useful tool if you just want to read a summary of these short reports, because sometimes they can be very long. In this, the aggregation and summarization of the publicly available short reports, that is available for free. And then our original research you can get with a premium subscription to Differentiated Analytics. And currently, we are running a promotion where you get 50% off the subscription. So after the discount, that'll cost you $10 per month when you use the discount code WSM50. So all the information is down below in the description if you want to check it out. And one final thing is we also have a Discord server for premium members of premium subscribers of Differentiated Analytics, where we talk about stocks and short selling. And also our premium subscribers can recommend topics for us to cover on both this channel and the main Wall Street Millennial channel. So if any of this sounds interesting to you, make sure to check out differentiatedanalytics.com. All of the information will also be in the description below. So with that being said, thank you everyone for watching, and we'll make sure to see you. Make sure to stay subscribed, and we'll see you on the next one.